We've continued to really see fundamentals in the office sector start to balance with an increase in demand, particularly for high quality assets, paired with the fact that there's been almost no supply, really starting to kind of create a more balanced market.
I'm here today with Brent Smith, President and CEO of Piedmont Office Realty Trust. Where do you see the strongest opportunities and potential challenges for Piedmont in 2025?
On the opportunity front, I think it's really in two different areas. First, on the operational side, and then second, on capital deployment. In terms of operational, we've continued to really see fundamentals in the office sector start to balance with an increase in demand, particularly for high quality assets, paired with the fact that there's been almost no supply, really starting to kind of create a more balanced market. And that's led to a lot of leasing success for ourselves. Within our own portfolio, about 16 million square feet. We've now leased 9.3 million of that since the pandemic. That's about 60% of the portfolio. An average cash roll-up of 8% as well. And so what we've continued to see is driving absorption in the portfolio and now reaching 88.8% leased. And really taking a chance to now continue to utilize the asset quality and the flight to capital to continue that absorption and momentum. On the capital deployment side, we do see continued distress in the private markets, and ourselves having access to the public market capital with a better cost of capital advantage. We'll look to take advantage of that as we look into 25 and 26. On the challenge front, I don't think it's unique to Piedmont in this respect, but I think as an office sector, we face a challenge of a misperception of really what's going on at the asset level. 90% of the vacancy really sits in the bottom third of the office stock. And what we're seeing is actually, and I think this will be in 25, a situation where despite all that availability, you're seeing a dearth of product in the type of buildings that tenants want to be in and businesses are gravitating to. So I think it is starting again to create a unique fundamental change in fundamentals for the office sector.
And as you meet with investors here at REITworld, are there common questions or issues that you're responding to?
There are. I think first, though, it's interesting to see what they're not asking. And what we're seeing is I haven't gotten a single question around utilization, and that being comparing how many people show up today versus where they were in 2019 at any given building or within the portfolio. And I think that speaks to investors now understanding that office is here to stay as an asset class. There will be winners. Of course, there's going to be losers. But it's really now a mindset of, okay, I believe in the asset class. Now, where do I want to put my capital? As we see then in talking to investors, and they're asking questions really around our own pipeline of leasing success that we've been able to garner, as I mentioned before, but really looking forward and into the future, we've had our own pipeline, about 2 million of proposals, swell recently to 3 million, and trading paper with tenancy. And what we've seen is that small, medium enterprise has continued to be very active. But now in the last 6 months, larger corporations and people who need 40,000 square feet of space or more are really coming into the market and saying, I want to be in an asset with a great environment, and there's less and less of those high quality buildings. I need to make a move and take space now. And so what we've continued to see is the top 5 to 10 buildings in a submarket are very successful. The other question we get a lot on, which I think is exciting, I haven't had it in 5 years, is talking about external growth. And really, how can we capitalize utilizing our balance sheet and our cost of capital, again, to take advantage of the disruption in the private capital markets where they have really limited debt alternatives. And a lot of the operators are ill-equipped to handle the operational intensity of the office business today, as well as the capital intensity.
And is there a project or initiative at Piedmont that you're particularly excited about for 2025?
Yes, we continue to evolve and progress of what we call Piedmont placemaking. And really over the last few years, we've continued to evolve how we design space and really package it to be consumed by, creating different vignettes for an individual to collaborate, teams of 2, 10, 50, and 100, really, to, again, the office is really about creativity, collaboration, culture building, and communication within your organization. And layering on that environment now in 2025 to really focus on the service level that we provide, so that Piedmont placemaking is not just a environment, but an experience within the space. And really the ultimate goal is to drive retention ratios. We're pretty proud of having a 70% retention ratio today, but with a vision to try to drive that higher to 80%, because the only thing that we find that's more important than our own cost of capital are our people. And how do we continue to drive down that cost of capital when we're building out these great spaces? And that's to renew that tenant when they come up so that we don't have to rebuild that space. And we think an elevated level of service continues to drive that retention ratio.